Well, hello again, everyone, and welcome to Maverick Currencies preview for the US payrolls due tomorrow at about 8:30 a.m. Eastern Standard Time. Let's get into it. One thing to note is that tomorrow is a holiday, so equity markets will be closed, but we still have the US employment report coming out tomorrow, which means that we are expected to see some lack of liquidity. But at the same time, we could see a lot more movement, especially if the number is quite far from expectation. So the expectation tomorrow is the unemployment rate to stay at 3.6, and the non-farm payroll change is about to be at 228 versus 311 previously. So we are seeing an uptick in the average earnings as well. So this is where it makes it interesting, because all week we have only seen negative data from the US. ISM is weak, services, manufacturing, even the unemployment claims that we got today had an uptick as well. So the question is, does the tomorrow's report will have an uptick in the unemployment rate, or is this going to be a terrible jobs report? So whatever that happens has a lot more implication on the bond market, what happen to yields, and what happens to the US dollar. So let's take a look at the velocity scores, how the currencies are setting up right now going into that report. So as you can see that we are getting a nice movement in European currencies. So Euro, Pound, and Swiss franc, they continue to be the outperformer. And we are also seeing the dollar and the yen stay strong as well. On the other hand, the relative weakness is really in the Aussie and the Kiwi, and CAD was mostly in the middle there. And so is the crypto world. So as you can see right now, we have a pretty divided split here. We have the Aussie Kiwi on the weaker side, but then everything else is on the right side. So where's the opportunity tomorrow? So we will be primarily looking at dollar crosses. And based on what happened with dollar, we can pair that against the yen, against all the other major currencies, and see where the relative strength and weakness is. As we always discuss, there are three ways to trade news events: enter before, enter on the news, or second stage. And you always need to make sure you're consistent with your decision making. If you have a better idea, it's always nice to have some half a position size beforehand. Sometimes I have no idea, I'm divided, I like to do enter on the news. And if we have extra time, then second stage entry. Tomorrow, not looking for a second stage entry. The reason why, the equity markets are closed, so we are likely to see a burst of movement in the first hour or so. And that's it. I think we're going to call it a day, and not expecting much to do, because again, there's equity markets are closed. We'll see the initial reaction, but we're not expecting to waiting for the markets to open up, so see where things are going to go. So the first hour is really where the activity is going to be. So again, entering on the news seems like a right idea for tomorrow. As always, you want to be careful about slippages, especially around times when there's a lack of liquidity in the market. So slippage can happen, and tomorrow's event we could see some slippage, because not because of the lack of liquidity, we could see things kind of move quickly one with the other. And at the same time, we get a whipsaw as well. And again, these are the worst ones, because it doesn't matter if you're right or wrong. It fills you in both directions and just doesn't go anywhere. So this is the kind of event that we want to avoid. We want to see a big move that happens one way, and we can capture that. So more than likely, like I said, we're looking into trading the news. We'll be actually meeting live tomorrow, and we'll be taking a look at the opportunities in the class. So we'll be going through it live during that session here. But let's do some work here. Let's take a look at how currencies are setting up going into that event. First thing first, we need to take a look at what the dollar is doing. And as you can see, that dollar is not in a free fall. And it's just sliding sideways to, slightly lower. But again, the rate of that change is not that aggressive. So you're going to keep in mind, if you're trying to be aggressively bullish or bearish here, again, this is where you want to be right in the middle and look at both sides. Interestingly enough, we are continuing to see the dollar hold this level. So this is, again, a good sign. If you're looking for a further break, I don't want to take a look at short right now, but if it does break the support here, then we can expect this to kind of go back towards the February lows. But until then, this area is a strong level of support. So we need to take a look at dollar for both the best and the worst case scenario. Now, let's take a look at what the bond market is telling us. So first thing we'll take a look at is the TLT, which is the standard treasury bond here. As you can see, I find it interesting that we are testing this very heavy level of resistance. So last 3 times, again, we have come across this level, we have failed. So again, this is setting up for the fourth time. And is this a time where it really breaks out? Again, this is where we need that news catalyst to get us in that direction. But if the bond market looks like it wants to break out, does that mean the equity market is actually moving lower? Well, let's take a look at the markets. And you can see that the markets actually are not really breaking lower, but they're still sitting at the highs of the range here. So interestingly, right now, both the bond market and the S&P is moving in the same direction. Now, what's happening with the bond yields? Now, this is where we'll notice that the bond yields are, since this whole collapse that we've seen in the regional banks, the yields have come up very aggressively. And you can see that we are just hovering around the support here. So for the bonds to break out, the yields needs to fall lower. And tomorrow's report can really drive some of this movement, because are the traders getting ahead and expecting the rates to continue to fall further? Or are we in still a good solid economy and we can see expectation for yields to continue to rise? That's where markets are stuck in between, and you need to be careful for both case scenarios. And looking at bond yields will be important, and that would again guide what's going to happen in the markets. So outside of the dollar, let's take a look at where relative strength and weakness is. So aside from the dollar, the yen, you can see that yen has come off aggressively, but in the last 24 to 48 hours, it's got a lift here. We talked about how the yen is moving purely based on risk on and risk off sentiment, which means that yen is a good place to be when markets are falling, and not really the best place to be when the markets are rising. So in this case, we definitely saw some disconnection here, but for the most part, as the markets were rising, we saw the yen was actually falling. So I think yen would be a good candidate as well, based on what happens with the dollar. Now, outside of that, we have a relative strength in currencies like euro. And you can see that on a daily chart, euro is still going higher. So every little pullback that happens, it turns out to be a buying opportunity. Let's take a look at a 4-hour chart. You can see that we saw a nice little pullback here, and then here we are back against that resistance. So this again would be a currency to watch for a possible breakout. On the other hand, Swiss franc continues to be on this roller coaster ride, because you can see that with this Credit Suisse collapse here, we saw Swiss franc really went down quite aggressively. And you can see that it's actually back towards the highs over here. So could it really break out further higher? I would be careful about this resistance. But again, looking very strong here. Continuing to be above the moving averages and moving in this upward direction. Now, pound also is doing the same thing. It's moving slowly higher. So again, these are not aggressive moves, but they are gradually moving in that direction. So your goal is to make sure that you're trading with that direction. In this case, the direction is on the pound to the upside, which means that if it does pull back, I think those comes out to be a good buying opportunity, but not so much on a breakout, because we end up with these tails that we don't want to see. So buying pullbacks is a great opportunity in this sort of direction here. Let's talk about growth currencies. So today we had quite a better than expected employment report out of the Canada here. So let's take a look at the schedule here. This report today was again much better than expected. Unemployment rate went down to 5%. Down 0.1%, and look at the employment change, 34.7 versus 10,000. So we had a beat across the board. Now let's take a look at what happened with the CAD. Well, CAD is not really going anywhere. In the shorter term, we definitely saw CAD picked up a little bit, but again, this is not a good looking price action if you're trying to be on the bull side. This is again mildly bullish, it's not aggressively bullish. On the other hand, where is the weakness? Aussie and Kiwi. So you can see that Aussie and Kiwi has been on this roller coaster ride as well. I mean, look at how messy the daily chart is, but you can see the direction is heading to the downside. Now, this is the area where Aussie has rallied a couple of times in the past. So if this is a true break, I think there could be a lot more gradual move to the downside. But again, this is the area that you need to be very careful about. Now, same thing with the Kiwi. I mean, Kiwi has been had a pretty interesting week so far, because we had the RBNZ rate by 50 basis points, and you can see we saw the opposite. We saw the the Kiwi actually went down and hitting the support here. So again, at the support, we haven't broken out yet. And in the past, every time we got it around this area, we actually did not break. So if you're looking for a breakout strategy, we need to then see a confirmation, which means that a close below the low here and then continues to move in that direction. But we continue to see this markets that continues to trade in this range, which makes it difficult for a directional trade, for a range, for sort of a breakout trade. But at the same time, I think trading within the ranges is like a decent strategy to have in current market conditions. Now, the S&P, today's price action, even though the markets are closed tomorrow, we'll be able to see how the equities are moving in the futures market. But you can see that a day like today, we didn't see a lot of fear. We didn't see people sort of sitting on the sideline waiting for the report to come out. We saw some gradual buying throughout the day today, which means that markets overall, the sentiment is much more positive than it is negative. So I think at the end, we'll have to see how the dollar reacts. So far, I mean, we're seeing the dollar is improving on this little momentum here. This is an hourly chart. We're above the 20 to 52 moving average. We have a 4-hour chart, which is, again, within this range here, but it's in this downward trend line here. But if it breaks out higher, we could see dollar actually do well here. But again, so far, you can see that starting March till now, dollar has actually weakened quite aggressively. So if dollar has a chance to rally, I think what we need to see is that the bond yields also then rally at the same time. So you can take a look at 2-year bond yields, and you can see that they're also sitting at a support here. For a bull case scenario, we need the yields to pull higher, and then the dollar to pull higher as well. So that is a trade here. So let's talk about best and worst case scenario. Let's say if the dollar is worst, what we want to pair with. I think euro dollar is looking very nice here, sitting right at that resistance area. Remember, every time we get above close to this area, I always want to see a confirmation. And right now, I don't have a confirmation yet. So that's something we'll be paying attention tomorrow. If we do get a breakout, and we don't want to be a buyer unless it breaks above this 109.70 to 110 area. Now, let's take a look at pound dollar. And pound dollars, you can see that pound dollar actually is coming back lower on the daily chart. It is, I mean, it had that resistance here, it broke higher, but it's just falling right back. So the question is this a retest or is it a fake breakout? Right now, we don't know the answer because we are right at that point. So this could potentially fall back lower if this doesn't hold this level and move higher. So a bit of about 50-50 on the pound dollar. Let's say look at dollar Swiss franc. I mean, you can see that the dollar Swiss franc has outperforming the dollar across the board. Not really loving the setup here. Now, let's say look at Aussie USD. If the dollar continues to be outperforming here, I think the next opportunity we can see is in the Aussie dollar if it breaks this level. But again, there's a lot of congestion in this area. And I don't really love to see this congestion because this is where we tend to get fake breakouts. We just don't go anywhere. We need a clarity in that breakout strategy. So Aussie dollar, as much as we like it, there's a nice support at 66.50 area. So perhaps breaking this area, I'll like it further to the downside. Now, Kiwi dollar. Again, Kiwi has done very poorly so far, despite that surprise rate hike, 50 basis point rate hike. So at this point, the question is this a buying the dip opportunity or is it just showing relative weakness? So you can see that the Kiwi dollar is not really going anywhere. So we are stuck in between this range here. If it does break this support area lower at about 61.70, 61.80 area, maybe we can perhaps look at that. But right now, moving averages are flat, which means that the prices are not really going anywhere. Now, dollar yen. This is the one pairing that I do like around any U.S. news event. And right now, you can see we were quite aggressively onto the downside so far in the past few months. We've seen a nice real rally here. We came back and it's just sitting right here. So this chart looked very identical to how the U.S. dollar basket is looking. So what's the trade here? Right now, we haven't broken the support here. So 130 is the area of support. Don't like it short unless we break the support area. But at the same time, if the dollar rallies tomorrow, I think anything above this 133 area can take us actually back much higher. So this is again the trade, right? This is a 1-to-1 risk reward ratio here, unless we break out one way or the other. We're kind of sitting right in the middle. So this is something I will also be paying attention to in the next 24 hours as well. I also want to point out that, whatever happens tomorrow, there will be an additional opportunity on Monday, because that's when the equity markets open up, and either we can see a reversal of whatever happens on a Friday, or we see a continuation of whatever happens on Friday. So we still have a good opportunity going into next week. And I also want to point out that as much as we are paying attention to this employment report tomorrow, keep in mind that on next Wednesday, we have the US CPI report as well. So again, I think that will, again, setting the stage very nicely going into next week. So again, that's a game plan here. Use stop limit orders if you're looking to enter before on the news trades. Equity markets will be closed, so expect a lack of liquidity. Again, weak report will likely to weigh down on the markets. Again, this is the battle that we have seen in the markets. There was a time where good news was bad news for the markets and bad news was good news. Now the question is bad news is actually now bad news for the markets, which means all week where we have seen negative data that has affected the markets to the downside because the recession fears are now elevated. So keep an eye on that one and keep an eye on relative strength weakness. We'll see you guys early tomorrow in the class. Cheers, everyone.